Good morning, everybody. Hope you had a great week. Markets overall were higher. Corn was up 27 cents on the week, and November 22 soybeans were up 10 cents on the week. To start with soybeans, we closed at $15.15 per bushel on Friday. On Monday, we had a lower day, but we perfectly tested the 20-day moving average at 1481, which we mentioned in the report last week. And that did a really good job of resetting these short-term strength and money flow indicators to keep and build the energy to move higher on this contract. Friday, we did have an ugly close after testing $15.40. But we did close at short-term support, which is the 9-day moving average. So hopefully we can bounce there to start next week. The technical trend remains fairly bullish, but we do really need to test 1540 here again in the short term. And then the next high is at 1555, which is the contract high from when Russia invaded Ukraine. Managed Money did sell off 6,000 contracts through this past Tuesday, but that doesn't account to what they bought Wednesday and Thursday. So they are net long 173,000 contracts through that time period. Moving on to corn, we closed the week at 751. Again, tested that 717 level we mentioned in the report last Saturday and bounced really nicely to end the week. Short-term indicators are very strong. Longer-term indicators are starting to flatten out some. So what I'd like to see in the near term is keep attacking those highs and building some new highs to keep the longer-term trend moving higher as well. But overall, it's a bullish chart. No concerns at this point in time, and we have some fundamental reasons to be bullish with the delayed planting and the war going on in Ukraine and Russia, and Brazil's crop being not as big as they thought. Managed Money sold 18,000 contracts through last Tuesday, and our net long 360,000 contracts, which is still a huge number that they are long currently. General updates. Commodities started the week lower after COVID news in China, but when the planting progress report came out on Monday, commodity prices turned higher. U.S. Is only 7% planted on corn and 3% planted on soybeans, and that's less than half the normal pace. In regards to Illinois, we're 2% planted on corn through this past Monday. Last year, we were at 21%, so quite a bit behind schedule. Weather forecasts are showing 4 storm systems that are supposed to come through before May 10th. So we will see how that affects the Corn Belt area as we move forward. Brazil will harvest their corn in the next 30 days. Again, that was supposed to be a huge crop, but recently there's been estimates that the yield will be much lower because of dry weather down in South America. Tight world supplies will continue to support new crop futures, and that's really going to put a lot of pressure on the U.S. to grow a record corn and soybean crop this year. Anything short, we could see commodity prices stay this elevated or even higher. Equity markets continue to slide. The Nasdaq had its worst month since 2008. Really what's going on is the Federal Reserve has been more hawkish or negative on their interest rate hike projections and the monetary policy. So that has kind of spooked investors in the equity markets. Oil prices are also trying to break higher again. We had some bullish action this week, so we will continue to watch what oil does. In regards to crop insurance, there's no big updates. I did see a few planters out this week, but the rain came on Thursday and haven't seen any since. If you do plant and you need to replant, please call us first. We need to send it a claim and we'll let you know, or the adjuster will let you know when you can start planting. Other than that, if you have any questions or comments, please reach out to Larry, Susan, or I, and we can help you with anything that you have. So we want to thank you for your business and hope you have a great weekend.